Okay, traders, hello and welcome to this live intraday strategy webinar. It is FOMC interest rate decision day. We are just getting CPI release here in the United States, guys. I want to bring that up. CPI fell to 1.7%. That's just hitting the wires right now. You're seeing some weight on the dollar here, something that the Fed will certainly be looking at, and the markets will be looking at heading into today's interest rate decision, keeping in mind that the Fed is really preferred gauge of inflation still remains the core PCE number, and certainly we'll be getting updated projections on that today. Core consumer prices did increase to 1.7% from May of 2016. So I'm just monitoring these levels right here. We got 1.9. We're expecting 2. Retail sales coming in at negative 0.3%. We were expecting 0.2%. Strip out autos came in at negative 0.3, expected 0.2. So softer print across the board. And certainly you're seeing right now, before we even jump into anything, dollar is breaking near-term support at 96.80. The low day close for the year, guys, comes in at 96.72. Remember, critical support that we just missed here early in the month, still in 96.47. All right, so we are getting some action here early in the morning. This does put the upside pressure, obviously going to be on the Aussie, which made also a breakout in overnight trade. We'll go over that. Euro dollar, which now is testing near-term monthly open resistance. Keep that in mind. Everything's happening pretty quick here, guys. Keep in mind that we're getting, again, the major event risk for the day is still at 2 o'clock. So if you do take any of these positions or if you're in any of these plays right now, a good time to kind of be light on your leverage and quick on the trigger. Okay. Hold on one sec. I got to trim some stuff too. Okay. So on the menu for today, I'm going to try to keep an eye on everything for you. Guys, also some disturbing news coming out here with what seems to be some sort of attack on some congressman at a baseball field here in the United States. So obviously that's hitting the wires too. We're going to see how that reaction opens up. But again, I want to caution everyone to any type of near-term positioning that you're taking today. All right, let's jump in. D, good morning. Sandy, same to you. Karthik, I hope you have a fabulous day too, my friend. Sarub wants to take a look at gold and silver. Gold actually is holding that ML formation that we were talking about the other day, Sarub. Really interesting. We saw a bounce off that so far. On the menu for today, DXY, real quick, obviously ahead of the FOMC, Euro dollar, Sterling dollar, dollar yen are three major plays for today's release. Sterling Oz was very interesting. We're coming right back into that support as I had kind of highlighted the risk for yesterday. I still like it, so we'll talk about that. Kiwi dollar still probing higher. It did kind of peek through that major resistance. I'm sure this dollar weakness probably prompted another leg. Yes. And that broke 72.30, which was a huge resistance. I was looking against that. Didn't really get any short triggers. You're coming up on basic trendline resistance now off the yearly highs. A lot of opportunities, guys, we'll be looking at. Dollar CAD is something we want to keep into account. That's continuing to drop on this move. Euro CAD, pound CAD, and gold and silver we got. Okay. As always, I'm in Sterling Oz. Short today, closed the buy at the weekly open, sold at the London Open today. Seems I could just buy the sell, Sterling Oz, the whole week long. I mean, yeah, I don't agree. I don't disagree with you. It's been a very decent play. I'm not sure what you're meaning by that, Sandy. Are you still looking lower? Because my biggest thing with Sterling Oz is we're coming into a huge support barrier. Actually, and if you actually saw the piece from yesterday, Jamie got a J spike on that as well. So price action rebounding ahead of a huge support zone. You have a 200-day moving average, whole lot of stuff down there. So we'll take a look. If you have any other questions, guys, as usual, specific trade setups you want to throw on the board, feel free to post at any time. Okay, let's jump right in. Things are moving, and I'm getting antsy. Here's what the DXY looks like. On a side note, guys, for some housekeeping, tomorrow I will be out. So Jamie is not going to actually do his webinar today because of the FOMC. He'll actually be moving that till tomorrow. So tomorrow at 11 a.m., Jamie will take the mic for the midweek strategy webinar and go over the aftermath, as it were, of today's FOMC rate decision. And we'll be back here on the intraday webinars back on Tuesday of next week. So quick side note there. All right, DXY. So we've been looking at this chart all month long, all year long. Everything's been pretty clean. Bearish invalidation level 97.57, 97.78 we dropped it to, or 79 here late in the week. We're now checking the low day close. Okay, this is the 2017 low day close. Only happened last week. Excuse me, guys, one sec. Getting a little bit of lag here. Okay. A break below 96.47 is what would really be needed to mark resumption. Okay, all we've been doing since the start of the month is setting the monthly opening range between not only these key lateral levels, Fibonacci consideration at the 618, and then just this former swing highs from July, but these parallels. Okay, and that's for me what I'm sort of looking for. Let me take a step back. The reason that this range is so focused right now is because of the divergence we marked into a key support, monthly opening range taking shape below, just between key levels. And obviously, if we were to break or rupture above 97.78, specifically on a daily close basis, that would suggest you have a larger recovery before resumption. Favored move, downside break. I mean, that's ideally. If you guys remember, here's what the intraday chart setup looks like. And here's what we looked like last night. You know, if you guys remember, we were talking about the fact that early in the week, basically we'd be looking for early weakness to give way to one more high, best case scenario, which would ultimately look to fade. So we got the weakness early in the week, but we're breaking that near-term slope. And now, heading into FOMC, the sort of lift that you would need to see for this upslope to hold. So as it stands right now, you know, this is pretty dangerous stuff here for the dollar index. Again, I'm not sure why. Let me just reload this real quick, guys. Okay. Okay. Any questions? Any questions? Do not go chasing this from down here if you're not already short. If you didn't position, this is nothing to us right now. We can't really participate and start chasing this right ahead of the FOMC. Okay, the data was weak. The data was weak, not dollar positive. Now, any questions on the index? We've gone over these levels at length all week long, so there's no change to anything that we've covered. Okay, everything remains the same. You know, below 96.80 at this point, you have to be very cautious. And obviously, as we noted, downside break that was favored is kind of coming underway here. So real quick, heading into the FOMC, what should we be looking at 2 o'clock when this thing comes out? Here's the dot plot. I kind of just wanted to highlight exactly what to look for. The terminal rate as it stands is somewhere around 3%. You can see that most of the committee lines up right here. The median rate heading into the close of 2017 is 1.25 to 1.5%. You can see that most of the committee members line up here. We're going to want to see any shifts to this, where the median lies, and specifically if there's any alterations to the longer run, whether the higher end goes higher, lower end goes lower, and more importantly, where the median or the majority of the council sits. A lot of research that we follow, proprietary research that we have associations with here at SB, their interpretation is that there's a big reluctance, in fact, for the Fed to move, but a way to counter that is to really hike rates as the expectation has been, as the expectation that they set. Okay, so the markets have priced in a 25 basis point hike. The focus is on this chart. If they reduce the longer running or terminal rate, that would suggest a flatter slope, a flatter hike path for interest rates. And despite an interest rate hike today, that would be interpreted as bearish. It could further fuel this downside break. If we see these levels hold as is, okay, and there's no change or alterations to the dot plot, and they do hike rates, I think you could still see a little bit of a dollar rebound, a little bit of a recovery, reprieve before we start to move lower. So specifically, that's what we'll be looking at heading into the release. Again, these projections will come out at 2 o'clock. The presser will start shortly thereafter. And that's also going to be a major point of event risk, because sometimes during those sessions, when she really gets pressed on some key questions on where the committee stands, we will get a little bit more guidance, and that could move markets as well. So again, these data releases are not always going to be as easy as CPI stronger, weaker, right? Sometimes the devil's in the commentary. Also, keep an eye on the updated projections, which will be released at the same time. More notably, we'll be looking at the central tendency, which is basically, again, their terminal rate, or where they think the natural rate is. GDP somewhere between 2 to 2.2%. You can see that that was raised from the December projection. So they did see a stronger 2017. It's going to be interesting to see if they soften this in light of the weak first quarter that we've seen. Unemployment rate, again, that's not really going to be a major player, expecting that largely to hold. December to March, there was no change on that. You saw an upgrade, okay, in inflation forecasting last quarter from 1.7 to 2 to 1.8 to 2, tightening the range just a bit, longer running at 2%. So look for any changes, okay, especially, of course, PCE, which is the Fed's preferred gauge of inflation. Didn't see any change to that. Obviously, we got weak numbers today on CPI. We'll see if there's any alterations to the Fed's inflation forecast. And this is really the main focus for the Fed right now. Dual mandate, fostering maximum employment and price stability, right? Price stability being inflation. So with employment picture on pace, you got a couple of weak numbers, but on pace, this is really what the major focus will be heading into that release. Any questions on what to look for in today's data? I did provide the link for you here, guys. If you click on that link at 2 o'clock, you'll see that the PDF will pop up right here, okay, in the June section. And then when you click on that, obviously, you'll get to see the updated projections. I will also tweet that on the release. Okay, now that we got that out of the way, let's jump into price action. This is what matters to us. So again, there was the key support, 96.80. It looks like we're making a downside break. Don't make any assertions or assumptions until we get into the release. If we pop back through, I'd be cautious. Largely we've been waiting for the breakdown. If this is it, we should stay below 96.80. Okay. Again, could be a euro throwover, so I do actually want to take a look at that next. Any questions on DXY? Going once, going twice. That was number one. Okay, number two, euro. Let's get through this. Here's what euro looks like now. Here's what euro looked like last night. Really tight weekly opening range, just gave out with this move here, taking the rally through the monthly open. Monthly open resistance was right at the upper parallel. We noted that yesterday with an upside bias above 111.61. So, is this a clear break of the weekly opening range? In my humble opinion, it is. If we maintain above the monthly open, I want to see some support pullback here. I do think we could, assume that this is actually a pretty decent playback. Remember the daily chart, okay? The biggest hurdle still remains 1285, the 1618 extension off the advance from the lows. That was the exact high that we've been holding for the last, it's also the monthly opening range high. Let me just say that. So you have clear-cut targets, topside breach 1343, 1369 is what we were looking for. Those are swing highs from back here of August of last year, and a sliding parallel of the same slope, just extending off the high that we made in December of last year. So nice little pivot there, coincides over the next couple of days. 1160 was our bullish invalidation level, and that still remains basically the case. It's the weekly or the swing low that we made. More importantly, former channel resistance or former upper median line parallel, now support. And it looks pretty good. I don't necessarily want to target a new high until we get that 1285 clip through. It's a pretty big region of resistance which held like a charm. So that's still the barrier of entry to really get the broader focus shifted to the euro, to the upside. But largely speaking, we've been constructive. I want to stay constructive, but we do need to see 1285 give out. As long as price stays above 1240 here, the open I think was 1241 exactly for the month. $12.42. Okay, any questions on the euro? Oh, Karthik wants to take a look at dollar peso. Sure, if we have time, we'll take a look at peso. That's probably getting interesting here too. And Euro CAD is on the list, Karthik. Okay, so moving right along. So the game plan for Euro, again, the levels remain unchanged. We were looking for a break of the weekly opening range, either a break above that monthly opening monthly open resistance or a break below 1161. Obviously, looks like we held that median line, broke to the upside, and as long as we stay above this, continue to look for that rally to stretch a bit higher in Euro. Next up on tap is pound. Here's what the sterling looked like. Got some interesting data in overnight trade, weaker than expected employment numbers. You know, we were expecting a print of 10,000. We got 7.3 as far as jobless claims are concerned, which wasn't bad. But the weekly average, or the average weekly earnings, we were looking for a print of looking for 2.4, came in at 2.1. So weaker than expected on the inflation front. Same thing on, if you strip out bonuses, the ILO unemployment rate did hold at 4.6. Gave us a little bit of an interruption here for the Euro rally, which came right into that first target we noted last night at 127.92. Pulled right back into the weekly open support, and then ruptured right back through. So guys, price action speaks, right? And you got to pay attention to these things. A lot of people on this way down here kind of got shook out, got scared, but you had the median line, had a basic 38.2 retracement, and sterling's notorious for these washouts. Notorious. And you could just look back in price action. Don't take my word for anything. I mean, go back and look at price action with these large spikes. It's, you know, known as a professionally traded market. So when you're trading this pair, you know, you have to be a little bit more confident on the position and confident on the analysis, and B, you have to work with a little bit more wider stops because it just tends to do this nonstop. Long story short, break above 127.92. You're looking for that rally into 128.40, 128.50, and that's a big region for me. Take you back to the daily chart. This right here. You know, you have the basic 50% retracement. This is of the entire decline off the yearly high. Longer term, it's the 618 retracement of the decline from the September high of last year. Okay, it's been a decent pivot in price right here. And then you have the monthly open just higher. But even in near term, you know, you have some slope. Right here, support, 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 held like a charm, break, you saw resistance, acceleration, resistance, support, support, break, saw acceleration. All of that coincides right here, 128.41 into 128.50. Here's the daily chart looks like. Momentum probing just below 40, but you can see that we broadly saw a little bounce there. So all indications, you know, I'm still liking the idea. Again, we're not trying to call the low, but certainly from price action, what near term has done, it continues to suggest, you know, that sterling may be still on a constructive path here. We want to stay on the long side. Questions on pound. You're at resistance right now. Again, keep in mind, heading into the FOMC, near-term resistance still 127.90. You know, weekly open support 127.20. Topside break 128.40, 128.50 is your first major target. If we get through the monthly open, then you're starting to think resumption of the broader uptrend. Okay, all we're doing is we're at near-term downtrend support, which converged on long-term uptrend support. It's a big, big barrier. Whether this materializes into resumption or we still have another low to make is the question. Okay, that's the question. Obviously, my favorite move is to the upside. Should cap this move for shorts, says D. 128.40/50 should cap this move for shorts. So that's the first level, D. I would be looking for near-term exhaustion. It might get a bounce back, maybe to the median line, maybe to the weekly open. I don't know if I'd necessarily be looking to play that. More so, that's where I'd be looking to probably take profit, D. And then if it pulls back, I'd be looking to get back in the long side. I really think this thing is overdone. I mean, we've been constructive. Not sure, guys, why I keep getting this lag. I'm sorry about that. From this move here. So my only concern is if we do get capped, D, to answer your question bluntly, if we do get capped up here and we break back below, I do think you risk a move into this region. And that would be sort of like my dream buy for the pound. You know, former basic trendline resistance, the lower median line parallel. By the time that price gets there, if it's in a couple of days, you'd have the 200-day moving average sneaking in that region too. So that would be sort of the scenario if we break down further. But for this advance, yeah, I think near term, that's kind of where I'd look to close out my long position. Or at least take some profit and leave a little on the table, bring your stops to break even. See if you can get the stretch. I mean, just above, you have 28.70 into 28.90. That's the 618 and the monthly open. So that would be my next sort of range of resistance I'd be looking for, not too far off. But keep in mind one other thing. I hate to keep throwing caveats on you guys, but we still got the BOE on tap tomorrow. So there is still event risk on the docket for pound, despite today's highly anticipated FOMC release. All right, my longs got profits out at 27.70 already. That wasn't a bad region. 27. I mean, you took it right at the weekly opening range high. That's not bad. You're on point. No, that's not bad. If you were holding longs, that's kind of where I would have trimmed some off. I would have trimmed some off again here, 27.90, and stops at break even at this point. But if you get the break, yeah, this is the first area of resistance. And again, former resistance, acceleration, support, and it converges on near-term downtrend and Fibonacci levels. So I take these on merit of, on their technical merits. Saying I was fearing the BOE tomorrow. I don't know if you want to fear it, but you don't want to let any emotions pan into your trading, but you do want to be prepared, okay? And it's better to be a little bit more prudent for sure with these interest rate decisions, yeah. Okay, any questions on the pound before we move off? Keeping in mind, again, BOE tomorrow morning, Fed at 2 p.m. Eastern, double back-to-back interest rate decisions on this pair. That's number 3. Got to pick up the pace here a little bit. Moving on, dollar yen, 4. Typically a strong reactor to U.S. data, obviously on the back of moves on yields. So dollar yen looked like this on the daily chart. Here's what we talked about last night as far as the yen ski is concerned. So, levels outlook unchanged. We're looking for a break of 109.48 into 110.44 with a downside break favored. So we're getting that move now, essentially. Remember the daily chart. It's a very, very clean daily chart for considering that this is dollar yen. And we certainly did see a topside break of that channel. We talked about that yesterday. We ducked right back below. Support to start off the week. We talked about resistance and a bearish bias sub 110.40. As I just noted, the 200-day moving average just above that. You had that 618 retracement of the advance off the yearly low. And 109.46, that support barrier is basically being tested right now. Okay, sort of the breakdown zone that would really put this thing in an accelerated path to the downside is right here. 2017 low day close, which we made back here in April, comes in at 108.90, and that converges today and tomorrow basically on this slope pivot. I don't really want to stress it too much, but we have seen so many nice pivots off that. It's worth watching. We just acted as support. It would necessitate a break of the monthly opening range low, and certainly would shift the focus dramatically lower for dollar yen. So as it stands right now, here's what the intraday chart looks like. Pretty clean. You're probing that key support barrier that we were talking about into 109.47, 109.57. Again, if we push through this, there it is, 2017 low day close, 50% retracement, and basic slope that we were looking at, that we tagged last week, right there. Okay, it's all at 108.77 into 108.90. Next downside target. So another one that played out pretty well. Finally got a break. Our bearish invalidation level held like a charm, even on this data release, spike into 110. What was the high just now? 110.24. Perfect. And the weekly open was right there, basically at 110.31. So we came right into it. Boom, reversal. See if we can't hold below this 109.47. Still liking to move lower into 108.9, 108.77. Another one may have trimmed out a little too early here, but keep in mind the ATR. Keep in mind you're heading into major releases. You got the BOJ on tap still this week. So again, another pair which is going to face 2 interest rate decisions over the next 48 hours. Good eye. A good thing to keep an eye on. Questions on dollar yen. Levels, outlook, unchanged. All right. Making good time. Here we go. Number 5 is going to be Pound Oz. Here's what Pound Oz looked like yesterday. So what did we say here yesterday? Okay, so we were looking for the pullback. This is kind of what I was expecting to see because of it just being a pound cross. And basically that's what pound likes to do. But we were trading at near-term resistance yesterday, right? I kind of highlighted this pair that we were following. You know, the last time we talked about this was back on June 1st, which is why I included all the daily charts and everything for you last night. But here's what the daily chart looked like. I mean, Jamie got a J spike on this reversal that we made. Huge region of support for Sterling Oz. We didn't quite attack it, but it turned just pips away, and it's the pound, so you don't want to get too, too meticulous with wanting to see a touch. At the end of the day, here it is. You have the 200-day moving average. You have the 100-day moving average. You have the swing lows from back here in August of 2016. You have the 50% retracement of this year's range, okay? And you have a former or current 618 extension. This is from the advance off of last year's low. Boom, boom, boom. It's a 618 extension. Once you saw the break, saw acceleration, on the way down, it's support. Add to all of that. Just erase all that from your head. Basic slope support of a formation which has offered some really nice pivots. 1, 2, 3 off the yearly lows for 2017. You can see that a sliding parallel from that high basically caught those 2 highs early last month. You could see that the median line, while we have seen a little bit of a messy move here, the breaks did see acceleration. Decent move on the 50 line. Break saw acceleration. Lower median line parallel. So there's a lot there. Okay, there's a lot there. Now, you could take this, for argument's sake and tilt it to here. I would kind of give you a little bit better of a slope with this touch, a little bit of a better slope with this touch and break. This would leave a little more room to the downside before you'd start to get, before you'd start to invalidate anything. Whether you're drawing it from that point or that point, my point being is this. At this point, I'm not looking to get any exposure on the short side unless we clear on a close basis those 200 and 100-day moving averages, okay? But it's an area to start looking for some possible support. Here's what the intraday chart look like. So if this was going to be the constructive formation off the low, as I noted yesterday, we would have wanted to see this hold right here. This is what my focus has been or my focus was looking higher above 167.76. Now that we've broken here, we're pushing below, kind of taking a little bit more of a neutral stance. I think you can get a probe back into 67.20, which is the bottom end of that range. But again, I'm not going to really be looking to attack the long side until we get some nice either shift in momentum, some more convincing price action. At this point, guys, I really wouldn't stress it. I'm not going to remove it just yet because if the rally comes up and tags the bottom of this as resistance, then I know that I definitely don't want to be on the long side. But if we recover right through, then just delete this and we'll look for a new formation. Maybe we'll have a new low to give us another reference point. So as it stands right now, it's simply made a weekly opening range above key support. Keep that in focus. Weekly opening range above key support. At the end of the day, we'd need to top 169.80, as I noted last night, to really validate resumption of the broader uptrend. Questions on pound Oz? Again, BOE on tap tomorrow. Sandy wants to aim for 167. What do you have at 167? Sandy, is that a pivot or something? What are you looking at there? Yes, the weekly S1, she says. Okay. Excuse me, guys. I'm just looking at something's popping out at me. I just want to see if there's any reference here whatsoever. Tough, but it's something to look at. So you can see that parallel extending off the highs that we made just for May and the June high. So they're monthly highs, something to pay attention to. Take that and extend it off the low that we made off the May low. Wow, so off the May high and May low, you can see that you saw a little quick break recovery. We're basically testing it again as support right now. Further highlights this zone. So we'll see if we can't get that. And again, some divergence here starting to materialize into that low. That could be the long and short of it, but I'm looking for some support still here in pound Oz. See if we can't get it. Now, I don't want to get crazy on this because Aussie did look like it just broke out, so we'll take a look at that in a moment. But still looking for support here. I want to see it below 67.20, Sandy. So I wouldn't get too aggressive on it. It's at big structural support. I'd hate to see you take a loss on that just because of 20 pips or so, but keep this slope here in focus. I will close half soon. As it is at a major support. Right on. So we're on the same front with that. All right. Any questions on pound Oz? Well played, Sandy, by the way. Going once, going twice. Okay. Now that we've done all of yesterday's levels, that was the last one from last night. Again, levels remain unchanged here. And again, we'll drop this formation if we don't recover within the U.S. trade session, or if we do, rather. If we rally, if this doesn't hold as resistance, just scratch that. But to go to the previous update, Kiwi dollar, first up on tap. Oh, I guess we could do dollar CAD first, number 6. That's what's been seeing the most ridiculous moves. Obviously, we've been waiting for a dollar CAD breakdown. Did I know it was going to be this huge in just a matter of 3 days? No. I bailed on this way too early. So if you're on the swing side of things or you're holding longer term positions, now you're coming into some serious levels. Okay. Turned out not to be the best near-term trade because you shouldn't have gone out, right? It just continued to drop. But a winner is a winner. Here we are. Major key support coming up at 131.45, 131.41. You have a nice confluence region of the 786 retracement of the 2017 range and the 100% extension. So if this is just correctionary, then this is a big region. Add to that basic trendline support. 1, 2, 3, 4. It's going to be a 5th tag. Okay, and this is where if we break below 31.41, you're talking about some serious risk here for dollar CAD. Here's the intraday chart. Looks like I guess we should just jump into that. Okay, we have some updating to do on this. Let me bring it to 240 minute real quick. And here's what dollar CAD looked like on the 12th. So we had talked about this just the previous day, and the fact that we were setting up a very nice weekly opening range above key support. 134.35 was the level to beat. We saw that break, quickly took out those two targets. This was big for me right here at 32.96, 32.83. We talked about that region, sort of my last ditch limit. I didn't want to really press it beyond that. You got pretty much very little pullback since then. So you would have been all right holding the position and just bringing down your stop. But the next target, 32.23, got quickly taken out. And then here's the final target, of which I would really start to use some caution. As I said, you saw the daily chart, even here on the near term, downslope support for the near term decline also converges there. So you can't get more critical than 31.43, in my humble opinion, near term for dollar CAD. Long or longer term uptrend support, near term downtrend support, Fibonacci considerations all line up right there. All right, immediate resistance, former support, 32.23 is also the 50 line at this point, heading into the FOMC. Bearish invalidation. What would turn us bullish again? Well, that would need to be a break above 32.96, basically the 33 handle. So let me just clean this up for you real quick, guys. I like to leave these just so you can visualize the reaction points, but I think you get the picture. Okay. Okay. So that's the updated levels there. If you need to take a snapshot of this for your reference, feel free, guys. Anyone who's new to the room, by the way, I do see a couple new names. There's a camera button in the top right-hand corner of your GoToWebinar screen. If you click on that, you can actually take a snapshot of any of the charts you see here. So if you need to reference it again throughout the day, you'll have that available to you. Karthik says no audio. Guys, is there any issues with the audio? If you can just let me know real quick. Can we get a yes from anyone in the room? Mic check. Now it's fine, he says. Okay, cool. Thank you. Okay, so that's dollar CAD. From a trading standpoint, if you're not already in a position, Gary, thanks for that. From a trading standpoint, if you're not already in a position, Mike, how would I look to play this? Well, look, two ways. If the dollar reaction, first of all, I don't go into these, I don't go into these releases with any expectation for what I want the release to be. I don't, just my humble opinion. I don't care if you're an economist. I don't care if you've been following these guys for years. I have an economics degree too. These have nothing to do with what the central bankers are going to say, because we're in unprecedented times. They've taken unprecedented measures, and the market's left just basically looking for guidance from these policyholders. Long story short, we have our bias. We favor further downside in the dollar, but as I said earlier in the session, where we are, if we were to break here, that would mark that we have a larger correction before we start to move lower. Broadly speaking, we're still favoring the downside. So if we were to get a spike higher in dollar, specifically versus CAD, this would be an area I'd be looking to initiate some fresh shorts. If we break lower from here, it's going to be a tough play to try to get involved. Because this is such a big region, you're probably likely to see this just continue to drop. Now, we've already made a massive drop, so I don't think that's the likely scenario. I'd like more so to fade strength than necessarily play the rebound off this level. With the same respect, if we get dollar strength starting to materialize, you want to look at a pair that's closer to resistance, right? And that's where you start to look at something like Kiwi. Here's what Kiwi dollar looks like. Which could easily mount this and pull right back as a false break scenario. Right now, we're testing the 2017 high day close, which comes in right here. What is up with TradingView today? Any of you guys having this problem with TradingView 2 today, with this lag? It's a big Fed day. I'm sure their servers are getting swamped. The close here was 73.10. Excuse me, 73.01. Okay, so you're basically the high that we made so far today is 73.03. So we're basically checking the yearly high day close as resistance. Just below that, you have basic 2-point touch, remember? So you never want to get too excited about a 2-point touch trend line. But nonetheless, if we were to pull back below, kind of would invalidate this near-term breakout. I wouldn't be surprised if this is some sort of exhaustion play. Near term. Here's what the intraday chart looks like. You'd have to see a break back below 72.30. That was our bearish invalidation level. Okay, as long as you stay above that now, we can't really be looking for the pullback. So here's a good example of where the trade just bucked exactly what we were looking for. If you guys remember, again, I'll take you back to where we were earlier in the week. In this same piece was right here. We were talking about critical resistance still 72.30. 71.70 was near-term support. We got a perfect tag of that early in the week. We came back into the weekly opening range highs, 72.30. I was hoping for a hold here. You didn't get it. This is a perfect example of what you want to see. When your bearish invalidation level or something that will mark as 72.30 is broken, I want to see acceleration like this. Now we're heading to major event risk, which is why I don't want to really chase this from here, and I'm a little more hesitant to confirm it. But nonetheless, from near-term price action, from what we're seeing, that would be a conviction break of the weekly opening range, key resistance for Kiwi. So I'm forced to, take a neutral stance here, heading into the release. Does that make sense, guys? On Kiwi dollar, any questions? Okay, that's number 7. Number 8, some of the crosses here, EuroCAD and PoundCAD, just to go over it really quick. Steve says, is anyone else having audio problems or is it just me? So Steve, no, you're the second person to say that. Okay. Guys, keep me updated if that happens again. I did just make some changes here. Okay. Moving right along. EuroCAD. So quick update on what we're seeing there. Obviously, things are changing pretty quickly here, but I just wanted to highlight, beautiful trade on the swing side of trades. Close out a nice play on that one. I was talking to Jamie about this one last night, and sort of the levels I'm looking at are pretty close to where we were finding support yesterday. So we had that swing low. But remember how we were talking about this formation, guys, and how while we haven't gotten too many plays off it, I kind of did want to highlight 48.23 as sort of a near-term support zone I'd be a little concerned about. You have those swing lows, you have the lower median line parallel. I still favor a broader near-term using this formation to your benefit, but I'm thinking you get a little bit more of a bounce from here. Divergence into the lows. If you look at this on a near-term front, it's a little bit clearer into those lows that we were making. And then the fact that the lower median line parallel converged on that swing low from May kind of was having me look for a little bit of a recovery. Now, near-term resistance, I still have into 49.10, 49.20 as the first level. Bearish invalidation, what you would need to clear would sort of need to be there to get back on the constructive side from a broader view. But I think after a drop like this, yeah, you could see a little bit more recovery before it starts to head a little bit lower here in EuroCAD. Now that's CAD weakness, right? So that could give dollar CAD that little bit of a bounce, which would be, a move into 31.41, and then the recovery would sort of be a great play. Or the recovery in dollar CAD back into 32.96. CAD weakness into that region. So for EuroCAD, where do I go? Where's EuroCAD? Right here. So for EuroCAD, some CAD weakness, carry a little higher. Maybe initiate a new short. Okay. Okay. Sorry about the little pause there, guys. Oh, it's an audio disturbance, like a loose mic connection, or is it? I think it's web-based, guys. I don't think it's the microphone. Do let me know, though. Okay. By the way, this isn't an outside 2-hour reversal. But it is an outside 4-hour bar. Okay, so an engulfing candle after a break of what seems like a near-term support confluence. Near-term price action, a move like that taking you back through the Asia highs, that's near-term reversal written all over it. All right, that's Euro CAD. Moving right along, Pound CAD looks like this. Okay, pretty clean setup. None of the levels have changed from earlier in the week. So again, I'll draw your attention to that update on Pound CAD. Oops, we were right there. Right here. So first up, daily chart. We were talking about this huge region of support here. Same deal. I'm not sure what's going on today with this computer. Right here, 67.95 to 67.53. That's still the level of interest for support. Momentum holding 40 or 30, excuse me, as support as well. Watch this trade. This is going to be a strong tell, I think, on the CAD crosses. If you see that downside break, specifically the 200-day moving average, which is just lower. On the near term, remember what we always say, a downside break of a descending formation typically can be the strongest part of the move. So, look for the July low, 66.86, 66. Next big area of support isn't until down here. That's 65.24 till 65.45. So that's a huge pivot in price. Okay, that's kind of the big daddy here if we do break below this key support. Remember, a much wider ATR. The targets are further apart. You're talking about targets that are roughly 100 pips almost away. So if you're new to the near-term type of trading strategy, it may not be the best thing to get involved with. For guys who have been with me for a couple of years, or gals who have been with me for a couple of years, this is where we can make some really nice plays. So my favorite move is not the break. My favorite move is for a little bit of a rebound higher here. You're seeing that momentum is trying to recover back above 30. And the initial target or the initial move, basically just be looking first for the move into the median line. Ultimately, the upper parallel should be what we'd be looking for on a bounce off the lower parallel. And let me just add one thing. I didn't see this. Let's see if there's retracement here that comes in handy. Not bad. Okay, I'm going to scratch this 618. We'll leave the 1618 down there. Okay, we'll leave that on there too. It's the long-term 618 that you're seeing here in the daily chart. That extends off the highs that you made 2000. The rally off the 2013 low. Okay, so that would bring near-term focus for resistance right here, actually. 170.37. So you got the 50 line. Okay, then the near-term focus would here. That would be the first area I'd start to look for resistance if this crack below support is going to hold. Okay, so a possible area for exhaustion near-term entry for another move lower If the sterling does finally start to rupture and break that key resistance that we talked about, if sterling finally makes it through, then a breach here would kind of put continuation in my mind. Okay, so if sterling breaks through this region here, as we talked about, and really marks resumption of the broader uptrend, that would be, in my head, a marker to look for sterling CAD to kind of follow suit there. Not my favorite one, right? Because I do like CAD strength, but if we do get that bounce in dollar CAD, that short-term weakness might be what's needed to fuel a pound CAD breach of that range. Questions on sterling CAD? That is number 9. Okay, into your questions from here. Take them in the order that they came in. We got Sarub, who wants to look at gold and silver. Let's do that, Sarub. Here's what gold looks like. So as I was saying early, when I was talking earlier in the session, look at the median line. It actually held pretty good. Now, if you guys remember, we were talking about this yesterday. We were saying, or I was saying, I don't really know that this is in play. We hadn't seen any moves off it yet, so I didn't really want to put too much emphasis on it, although we did see slope, nice pivot, decent pivot, I guess, and the 2 touch points here were all right. So I was kind of looking for confirmation that we're working with the proper gradient, and that's what really matters when you're doing MLM, any type of slope analysis, is have we found the proper gradient that the market is traveling on. And certainly with the break below a 38.2 here, look at the lows, tagged right there, that same slope was perfect resistance. So I'm starting to think that we're on the right course here near term, and that would highlight near term resistance at the 2017 high day close 1284. So if we were to get a rally, for example, into this region and it holds on FOMC and the dollar sees some sort of bump, that actually would be a nice short position against the highs trying to play another downside move. But this is what I would need to see hold near term for me to continue to favor a little bit more of a correctionary play here in gold. At the end of the day, guys, you want to be very cautious here. Remember, we're working with a slope here. This is the same slope extending off to 2011. It's not the actual 2011 trend line. If we go back to the weekly chart, if we go back to the weekly chart, the basic trendline resistance off the 2011 all-time record highs, we're trading above that. Okay, we were trading above that, and in fact, we made multiple closes. Now, it just so happens that a parallel off of last year's high was holding essentially until today. Okay, if we close above it again, I don't know. This thing is fidgeting with some serious levels here. So, Sarub, I hope that offers some clarity. Again, I don't really like the longer term call here for gold. I'm kind of a little bit more of a neutral stance. The only thing I'm looking for is this chart. So focus on this for now. I would say with the near term risk weighted to the downside sub 1284. Next downside target would be a 1255 clip. That's a 50% retracement of the entire advance off the lows that you made last month. And that would be the 50 line that we just reacted to yesterday. So it kind of hold well. It's kind of be too clean, to be honest with you, but that's sort of the game plan moving forward. Does that make sense, Sarub, on gold? He says, got it. Right on, brother. Here's what silver looks like just to follow along. Here's the silver trade. Cleaner as far as the near-term structure is concerned because the lower parallel, which converged on the 618. These are going to be my favorite convergences. Was a very nice rebound. Again, now you saw that break above 30, really shift the focus to the upside. The 50 line offering beautiful pivot support, break, acceleration, resistance, resistance, resistance. So if you put a gun to my head, actually I'm a little bit more favored to play this than gold maybe. Okay. to kind of get the picture there. So I want to see a hold here. If near term, this is going to be near term resistance rather. For a pullback, call this near term support. This is the breakdown zone. Yeah, this is huge, guys. Sarub, this is big. You have the monthly open, 50% retrace. This is not the entire 2017 range, but it's the decline off the 2017 high. The upper median line parallel this formation, which we have broken, but nonetheless we're below again. And former swing highs from January. It's a pretty big region of resistance. Okay, any long exposure should definitely be wrapped up somewhere around here. That would put, again, the emphasis, look at my mouse on the left, again, the emphasis on a breach above that former slope support that we're looking at right here. Why? Get the 100 and 200-day moving averages right in that zone. You see where my mouse starts to coincide on the left, right here? So big region of resistance on any long exposure, also needed to validate resumption of the rally. Till that breaks, I think you're at risk for an exhaustion pullback here. All right, so that's silver. Quick look at dollar peso. Who was the peso for? Peso. Karthik, I think it was. Here's what peso looks like. I think you guys asked about this late in the session yesterday, and we just got a chance to look at it. But it's a good time to, because it's breaking some pretty major, or it's testing a break of some pretty major levels here. Again, I'll bring your attention to 18.0045, the 38.2 retracement, the entire advance off the lows that we made back in 2011, specifically April. So it's a fib. Cool. Add some technical clarity to that. You have the closed lows that you made back here, the actual stretch low for November of last year, and median line support. Okay, whether you're using that swing high from November or whether you're using the former swing lows of the year, both of those converged right here. We talked about that late in the session yesterday. A daily close is needed here, Karthik, for me to validate a break of this critical level. When you're talking about such a massive, massive zone, I need to see a daily close below before I start to do anything on a trade like this. Also note that momentum is just looking to break into oversold territory, which wouldn't necessarily be a bad thing if you're looking to take, or if you're favoring the short side. That's what you want to see. It's healthy in uptrends to see momentum get into overbought, get into overbought. It's healthy in downtrends to see momentum get into oversold. So we'll see if it can, probe here today. Obviously, you have the FOMC on tap, so if you do see dollar weakness, might be a beautiful decline. I just don't know how you would look to play this in the near term, Karthik. As far as getting into fresh new exposure from here. Yeah, just trying to find a proper gradient here. If you use the high-low high, it shows that the upper parallel caught that. The median line's been sitting as support. We kind of just pivoted below it. If you use the secondary high, it looks like it fits a little better. I don't really like messing with these guys. Usually I'm not going to use the high if it's like a really radical spike. I don't really know if that would constitute what happened on the 26th. We can check that out. But either way, 13.0045, you have to see a close below that to continue favoring the downside. It's going to be a volatile day. It's one of those pairs that will see a lot of volatility on U.S. data. And if the dollar breakdown intensifies, remember what we talked about at the very beginning of the session, if there's any alteration to those dot plots and you see even though they're hiking rates, and you see that the Fed, the market will interpret it as dovish if they lower those interest rate expectations, despite the hike. And if you do see a dollar weaker reaction, I think we'll get the definitive move on that. Until that, Karthik, this thing could come right back in and really surge if the dollar rallies today and just rip everyone apart. I'm sure there's a lot of people looking at this. So this will be a tell. This one will be one of the trades that I will actually want to kind of keep an eye on tonight for sure, or this afternoon into the release. But look, below 18.0045, I want no business on the long side. No business. Make sense? He says, yep. All right. Any other questions? I'm over on time, but any other questions? He says, thank you so much. Hey, Karthik, my pleasure, man. Good luck today. Any other questions heading into the FOMC, guys? Feel free to post them now. Again, a quick reminder where I won't be in the office tomorrow for medical leave, but Jamie will be doing his midweek strategy webinar at 11 a.m. To go over, the post FOMC reaction and some of the setups we'll be looking at heading into the close of the week and next week. So don't miss that at 11 a.m. Eastern tomorrow. And then again, we'll be on the public forum on Monday and back on SB Tuesday, Wednesday, and Thursday of next week. Best of luck trading today. Keep your powder dry heading into the 12 or the 2 p.m. hour rather. And let's see what Yellen has to say. It's going to be all about the projections, okay? Forget the interest rate hike. We're already priced that in. It's going to be about what the outlook is moving forward. Till then, guys, best of luck trading, and I will see you all next week. Cheers.